Good morning to all traders and welcome to another daily market insights video provided to you by Orbex. Today is Wednesday, the 28th of August. We're going to talk about metals and energies, gold, a little bit about silver and also oil. Gold moved up yesterday and there is quite a few reasons. One is that China denied that there were talks between US and China. Number two, G7 sort of positive developments around trade war, of course, and also between US and Iran started deteriorating now because Iranian president said there's no way he's going to have talks about actually pretty much stop with the US president. At the same time, we have Fed rejecting using political considerations to set monetary policy. At the same time, overnight, we had the US hitting Huawei innovation centers by blacklisting them. So another one important to consider. And as well, at the same time, we have the continuous developments in Hong Kong, instability in the Persian Gulf, and also, of course, in Venezuela. All of those support the gold market. Now, one will consider that oil is going forward because gold is going up, but the thing is that oil went up, not just because we had an amazing stock inventory withdraw, but also because OPEC efforts seem to start paying out because apparently conformity levels were up to 159%, which was 22% points higher than in June. So although despite that, actually, we've seen OPEC's efforts to rise the price of gold not being as successful, and that is because, of course, they are outweighed by global oil demand. Now, on the calendar today, there is not much to look for. Really, it's just the oil report from EIA. Let's see if it's going to follow the API one. That was an amazing one, apparently. I want to start with gold. We talked about it for quite a while. We are still actually really following our patterns, which is very good. Knowing that, the market's actually moving as expected. So we saw this as 1, 2, and we're really thinking about 3, 4, and 5. This one wave looks like it's going to end very soon here. Why do I see this as a 5? It's because this one is this ABC looks like it is an expanding flat. It's ended around 38.2, which is where B should end on an expanded flat. So from here, we should expect an impulse wave C or even a triangle to end this corrective move. And that would be around 1465 or even around the 15 level, according to Elliott wave theory, of course. Now, if we go a little bit lower, what we can see here is that we've had ABC, and now we're expecting 1, 2, 3, 4, 5. Now, there is some confluence levels here. The 161 extension of this wave is 1494. The 261 extension is 1465. Those are between what Elliott theory tells us about ending C waves of expanding flats. So I'm actually expecting prices to move anywhere between these levels and then start really moving up for wave 3. That is also something that worries me a little. So we could see prices moving a little bit higher, but I really doubt that we'll see prices breaking above 1555. In case that happens, that we'll have to revisit. Oil market, another uncertain, that's a bit more uncertain here, but directional buyers. We're seeing this a wave 3, 4, and then 5 down here. So we still could be 1, 2, 3, 4, 5. Okay, that would be one of the scenarios. Second scenario would be that we ended here. That's wave 1, 2, and then we'll go on 3, 4, and 5. Not as likely to happen. The other one would be that we are going to see markets before anything else happen consolidate with a triangle pattern over here and then either break lower or we can see prices break higher. Down on the 4-hour, This could be 1, it could be B, it could be 2, or C, okay? So nevertheless, despite the fact we see this as 1 for now, we see this as 2 for now, and this is a nice flat pattern, okay? Flats are like ABC, ABC, and then 1, 2, 3, 4, 5. So in the shortest term, we're expecting that to be correct. 1, 2, 3, 4, 5. Expectations of wave 3, 60, wave 5, around 64, 65. Down on the 1 hour. We've had this nice correction over here, and then of course 1, 2, we're going for 3, 4, and 5. Now, if that of course failed, because we are still, it looks like we're going to move into another corrective channel, we could break lower, okay? We could have a deeper move, although that we ended at 61.8 here, this correction. We could have another move to the downside, correct a little bit lower, okay? That can always be possible, and then start moving up. But I would be looking because we have this signal over here, I would be looking at prices to break below that level for that to happen. Otherwise, if we have prices breaking above, obviously we're looking most likely to get around 57.50, break that to confirm wave 3. Otherwise, we have to revisit. Now on the silver quickly as well, after the break of this huge triangle, multi-year triangle, we've got wave 1, 2, 3, 4, and 5, ending exactly at 161.8, around 18. Also a good psychological level. From here, we expect a correction. The correction is likely to come down to the previous wave 3, which is also the wave 100 extension of the first wave of this move, okay? And that's around 16.6. Now, if that happens, of course, then from here we can start looking for buys. If that doesn't happen, despite the fact we have a very good bearish signal here, we're most likely looking for another false break to the upside, but that is likely to be very short-lived. So I want to thank you for watching for another day, and as always, I want to remind to keep an eye on our blog. It's where we'll cover the latest headlines, provide all the necessary tools traders need to trade responsibly.